Vincenzo's Go Crypto Investing this September the 30th, 2025, the last day of September, if you can believe this already, moving our way into spooky October month of the year, right? Everyone's favorite month. And you can see the U.S. dollar is running flat today. Gold futures and silver futures were down. Gold futures has rallied back along with the spot price. And we'll just focus on the spot price of gold is slightly up, but it was down. Silver was down about 2.5%. And then it rallied close to even. And then now it's rallied back down and coming closer to the daily lows. So we're going to see if this reversal is a short-term reversal. I think silver, before any kind of a correction, like of a 10% correction or higher, it's got to hit $50 first. You can see some of the mining stocks are up. They've been up and they've been down. Some of these mining stocks have had a 5 to 8% swing from high to low or low to high from where it's at. So we'll continue to pay attention to that. Copper slightly down. You can see the U.S. 10-year bond is about even today, and the 30-year is even. The 30-year is at 4.7%, and the 10-year bond is at 4.137%. Oil took a big dive today, giving back most of its gains. Or that might have been yesterday. That was yesterday, then it was down on the open, and it's trying to trickle back. But you can see oil over the past month was up 6%, and then it's almost given that all the way back. So we'll continue to watch that in the commodity sector, as there's a lot of things going on, as the affordability of everything in the United States has become unaffordable. Housing is unaffordable. It's not just the interest rates, it's the actual price of the house is unaffordable, right? But people only look at the monthly mortgage because that's the way we've been trained. What's the payment? How much a month is it? Oh, I can swing that. When it's really how much is the cost of the total item after you pay interest and tax, right? And nobody looks at that. And that's why people stay poor, having all these payments, because check comes in, payments go out, there's nothing left at the end of the month. And when you pay interest on a house at, say, 5% or 6% right now, which is the average new mortgage, 30 years, you're paying 6% a year on whatever the balance of that mortgage is, right? So if you take a $300,000 mortgage for 30 years and most people put down 3% paying PMI, it's going to cost you $750 to pay it off for 30 years on a $300,000 house. That's why you have to have financial education, and you have to understand the way things actually work. And if you don't understand the way things work, because most people don't, because you're not taught it in school, even in higher education, unless you take an elective class on that, you have to be educated on how this actually works, how interest on a loan on a home works, right? And because you want to get out of that debt cycle. When you're in a debt cycle, it's almost impossible to gain wealth. You have to be out of debt to gain wealth and to increase wealth, because you have income with your job to invest. You can't have a $600 car payment and then a $300 a month for a home refi that you did. You redid your kitchen and you couldn't pay for it, so you took out a 2-year loan. You can't be doing that, right? It doesn't work. You have to stay out of debt. You have to be debt free. Right, and that's what we do to become an asset millionaire. And if you look at, and we have because I believe there's a financial crisis on the horizon, and I think it's because I think we're living in the 1930s again, in the 2020s, right? And I think as we get into just like 1928 to 1930, you had the big crash, the stock market crash that turned into war, that turned into government trying to solve the problem and created the Great Depression. I believe we're going there again, and I believe it's going to be very, very bad. And you can see the Bitcoin price as we filibuster sitting up here just below. Yesterday it was just above the 50-day moving average. Today it's just below the 50-day moving average. And what we're going to watch, like we were watching the last few days, is are we going to come back up and try to make another run at this major upper resistance up here, and either A, get back on top of it, or B, get rejected, and then that might be confirming another tea leaf, that confirming of a breakdown out of a 3.5-year pattern of this rising channel support, this rising channel, right? So because it's acting as resistance right now. So that's what we're looking at. Or are you going to get rejected where you're at now? You can't get back above the 50, and then you start to trade back down, because you do know if we zoom out into the daily time frame that That is your 3.5-year rising channel that we were talking about. It started right about the start of 2023. And if you break down and confirm out of this, because you can see our tracks do show big corrections after this big run up, that the underneath major areas of support would be at first the 200-day at 106,000, but I don't believe that would hold. On a hit, you would get a brief bounce back, but then I believe that would eventually fail. And I think 95,703 and change is your critical. Are we going major short-term bearish? And that would be getting below that and confirming below it, because then you would drive immediately down to the 79,000, which would bring in the 61,000 in the play, which nobody thinks that can happen, but it can happen. But that would be, if we don't make a new high, that would be a 50.53% correction from its swing high, which would be a classic normal correction sell-off after a massive pump to the upside in the Bitcoin price, right? So we're going to continue to pay attention to that. If we look at the Ethereum price, is the same thing. You can see yesterday we just snuck back over the megaphone neckline support, and we were running up against the 50-day moving average, and you can see we got a wick candle. Now the next day we're getting another wick candle. So we'll see if you can get over this 50, you can make a run up here between the 4,400 and the 4,700. If you get rejected by this 4,200 and can't get back on top of it, you're going to come down to the 4,100, eventually end at the 3,800 and change, and then potentially slip that and come down to the 3,482. So that's something that we're paying attention to here in the short to medium term, to see if we can't get back on top of this critical $4,001, stay on top of this critical megaphone neckline support now that it's back on top of it, and continue and try to make a new high and breach the 5,000 and get to like 54, 5,500. On the downside, if you can't stay above this megaphone neckline support, obviously the 38 you would come back to, but since you already took out some buyers, I don't believe you would hold that, and I believe the next level down would be this 34.82 and 73 cents. The XRP is the same thing. You can see we had a nice little bounce from just above the 200-day moving average, sitting down there at $2.61 or $2.61, which is just above the critical $2.55, $2.56 pattern support down there. And you can see we initially got rejected off the 50-day moving average, which you would expect. Now we're just below the 100-day moving average. To get bullish is the same as yesterday. You want to get back on top of both of these moving averages, and then eventually, ultimately reclaim the 307, and then you're short to medium term bullish. The bearish is still the same as yesterday in the short term. You can't get back on top of these moving averages and stay there, and you come straight down to this 200-day and this major horizontal left to right support and resistance at 255, and that's your critical pattern support. Even if you did come down there like this, I would expect to bounce first, but that would bring in maybe this 50-day moving average in the daily time, or the weekly time frame down there at $2.13, and these are targets I'm watching out for, the 213 and the 162. That's something that's on the table if we don't break out of this current downtrend soon with some momentum in the overall crypto market, because I see a way and I see how this could happen, because I thought we had some lower targets before we had this potential mountain double top that you can see we've just formed with the new regional high. So that's something I'm very, very much paying attention to, but something else on the unaffordability of everything that's going on, and something that nobody pays attention to, let's look at food. This is just all food. And you can see since 2005, we've only had, and here's the misconception and understanding of lack of education and inflation. So in 2005, you were up 2.2% in food from the November 2024, right? And then you can see every year, month over month, we're always going up. So every year, February 2006, we were up 2.8%. If we go to February 2007, we were up 3.1% in food. So now that's 5.4% in 2 years. We were higher in food, because every year it's always a plus. Some years it's only 1 point, plus 1.9, but it's always a plus. It never goes down, except for very short times, only a couple of months over in the last 20 years. have we had negative or deflation? Because the government hates deflation. Look, we actually went down negative 0.07. So that means the year before that, if we were up 1%, now we were only up 0.3% for that year, right? But we don't do that. It's always plus. There's never a negative. And this is why everybody now is saying food is so unaffordable, because look at what we just did. We had 3%, 10% year over year, but now we're still working at 3%, right? But that 10% never got wiped off. It just lowered the rate. That's why everything's unaffordable, and it's the same with electricity. It's the same with energy. But you can see, at least on some of these, energy, you can see during the Great Recession, the depression that we had, or the financial crisis, you can see 13%, 20%. So that wiped off some of these, and 18% here got wiped off by negative 25%. But the overall on this is it's up. But at least energy, there's some give. But most inflation is always up, just like if you do all items, right? All inflation, you can see, is sitting at 3%. And look at, even during the Great Recession, that financial crisis, let's get rid of that. All should just show me the all line, is what I thought it would do. It did. Get rid of that. You can see during the Great Financial Crisis, I'm getting scatterbrained here. I'm on my lunch. I'm trying to jam a bunch of stuff in. You can see we actually did have a little bit of deflation, and this is what drove the government crazy. They had to fire up and create quantitative easing into overdrive because they wanted to print themselves out of deflation, which is good because that was all this 4% year-over-year inflation, 2%, 2%. 4%. This was starting to get rid of that because we're at 0 in 2029 in January, negative 4%, negative 1.1%, negative 2%, negative 2%. But then they had to print themselves out of there, and that's the only time you've had negative. Look at barely in 2015, and then they fired up the printing presses and lowered interest rates, and then we had the COVID nonsense. And look at that. And this is what drove Joe Biden out. 1%. Then we went 4%, 5%, 7% the next year, 8%, 6%. That's all adding up on itself and never has any deflation to actually get rid of it. So when you look at the cumulative effect of that on food alone, food price increase 2005 to 2025 is 74.9% higher than it was in 2025, meaning you need 74% more money to buy the same goods that you bought in 2005 versus 2025, because like I showed you, there's never any deflation. It's always plus. It might only be plus 0.5 or 0.5%, but other times it's 5%, 8%. It never goes down. The basket of groceries cost $100 in 2025, cost $175 now. The average annual inflation on food was 2.8 to 2.9% per year, because there's never any deflation, because the government does not like deflation. They have to print themselves out of it, and that's why all items with the inflation, which these are manipulated inflation data, because they do not calculate them the way they used to, because they have to make them not look as bad. If these were calculated the way they were back in the 1930s, 40s, and 50s, we would be at like 10 or 15% inflation year over year right now. Like the channel, subscribe. I'll give you some more updates later on this evening. I know I say that every day, and some nights I don't, but I guarantee you, take it to the bank. Vincenzo's Gold Crypto Investing will have an update this evening. Peace and love. Stay out of debt. Have solid investing. Understand assets and dollar devaluation, currency expansion, and interest when you do take on debt to become an asset millionaire. Peace and love. The Rex Eyebrow. Jay.